Welcome to the Monash interview. This is Colin. 3rd of July 2008, the Reserve Bank of Australia released the newest monetary policy. They decided to keep the cash rate remain unchanged at 1.5%. Why do they have this decision and who will be affected? Today we invited Governor Danny and Governor Eric to answer those monetary questions for us. Danny, when the board decided to leave the cash rate unchanged at 1.5%, what is the influence to the household consumption and labor income growth?
If the cash rate keep unchanged, the interest rate will also unchanged, so that the private saving will not change too. Due to the consumption growth has been fairly subdued in the March quarter, following the strong growth in the previous quarter, the household will still increase slowly or keeping a stable level. The consumption does not have a big change, so that the labor income grows. Wage growth is low has continued to be weak as over the previous of the years. We can see this formula. MPC is the marginal propensity to consume. 1 minus T is the disposable income. MPC will change only occurs when the disposable income change. If it does not change, the consumption will not change too.
Eric, as one of the main export products, the price of natural resources has gone down. Why don't the RBA change the cash rate to increase the price for more profit?
Yes, we can do that. However, according to planned expenditure theory, when we raise the cash rate, the net exports will decrease at the same time, and it will influence domestic investment and consumption. However, moreover, if the price of natural resources increase, it will influence the demand. So we decided to keep the cash rate in 1.5%.
Danny, as we all know, the household income growth increased slowly. If the cash rate stay unchanged, how will it affect the household debt level and the employment rate?
Due to the global reason, if the cash rate stay unchanged, inflation rate remain low. The labor market will be tight. A strong growth in the employment rate has been accompanied by the significant rise in the labor force participation. A gradual decision in the unemployment rate is expected after being steady at around 5.5% for much of the past year. The employment rate increased. The people have more ability to pay back, and their debt level will become more higher.
Eric, during the period of trade war between China and the USA, how can the stable cash rate help to keep Australian economy with sustainable and healthy development?
That is a good question. Although the trade war between the major economies, thus the exchange rate of AUD fall, it still remains within the range it had traded in previous 2 years. And the domestic labor market had remained positive. Furthermore, the GDP had increased by 3.1%, although it had a little bit more than the expectation. Based on this situation, do not change the cash rate is the best choice to promote the net export and decrease the unemployment rate.
Danny, I have done the research for the past 6 months. The price of high-density property has been decreased. What is the influence to the price of other property?
Well, the historical low cash rate of the recent years, combined with the low interest rate offered by the banks, have been continuous cities as the reason for the increased investor activity and climbing property price. It is easy to see the correlation. If the borrowers have access to cheap money, then they can offer to borrow more capital and invest into the more properties. With more active investors in the market, demand grows, with no corresponding rise in the supply. Prices climb as the competition increases for the same stock.
Thanks, Danny and Eric, to answer our question about monetary policy. That's all for today's interview. Thanks for watching.